So onwards to Art's laughable valuation of Zoom, because it's getting harder and harder to defend Cathie Wood. I think we've said that we thought she may have a good year if the market turned, but she has released a 2027 model for Zoom in which she predicts this is compound average growth rate, that Zoom will have 66% revenue growth, 74% adjusted margin growth, 71% adjusted EBITDA growth, 103% unlevered free cash flow growth, that includes stock-based compensation, 50% growth in net cash, and she thinks the price is going to increase just 75% compound average growth. Annual growth. I do that all the time.
I saw the thing, and I've seen on Twitter everybody taking the piss and making their own, because you can make your own version of it, can't you? Out there, I've seen everyone taking the piss on Twitter. In her defence, right? So I'll give the defensive point of view, and you can tear this apart, even because it's still pretty easy. Flywheel, that's what she's going with. She's using the term flywheel. She loves these buzzwords that the big tech companies have been using. Flywheel. So she sees the video service similar to what we're using right now, by the way. We're not using Zoom right now. We're using another company. We're using a competitor. She sees that video service as a flywheel, and they're going to invest in all of the other stuff. So if anyone's not familiar with the flywheel term, it's that the flywheel generates all the cash and you get to invest in other things and make them grow. Google, Amazon, Apple have all done these things. They've had their flywheel and they've been investing in other speculative stuff, and they've grown their business to ridiculous levels. I'll let you finish that one. Does that work?
Well, were you supposed to be making the case for the defence by pointing out it's full of buzzwords with your opening gambit for this?
I'm trying to be devil's advocate.
Well, look, that's a sensible thesis. I guess I worry about the flywheel a little bit, and I worry about the moat around that flywheel, because Zoom appears to be stickier than I thought it was, in fairness, to give it its due. I feel like Zoom is basically a commodity product. It's video conferencing, and Teams does it, and Google tried to do it, and no one really uses a Google thing, and we record through something that is none of those things, and the reason we record through something is... All right, Paul talks to himself on Google then. But the reason we use something that isn't Zoom is because Zoom is terrible for the kind of things that we use it for. And we tried using it a couple of times, and it's the reason that some of the sound is terrible on them. But so here's the thing with Cathie Wood. I could make sense of a lot of what she says, and I give her a lot of respect for continuing to publish her research and say what she thinks, rather than having her research hidden behind a wall and just coughing out a kind of price target number with no justification for it at all. You can think what you like about the case, and I don't think it's very good. But in the case of Cathie Wood, I really don't like the fact that she appears to be everything that I dislike in terms of being a salesperson rather than telling you stuff that is likely true in some way or another. So her job is to get you to stick money into her fund so she can take it off you in the form of fees. And that, as far as I can see, is what it comes down to. That's what a lot of people were trying to do, of course. But that doesn't change the fact that it's true of her. The issue I have when I think about her stuff in my own things, it's very tempting to then just discard all of it. And I think there probably is gold to be found in some of these Cathie Wood stocks. There's probably some good stuff in there, but you have to go panning for it quite carefully. So I think there is going to be a big winner in there somewhere. I'd be surprised if it's Zoom. Zoom I saw had come down an awful lot, and its numbers now look like they're in quote-unquote value territory. And it's clearly a business that is growing its earnings at a decent clip from what I can see of it. I was very tempted by it as a stock for Paul, actually, at one point, because I think I heard they're going to start buying back shares as well into the bargain. But I'm a little uncertain about this. Okay, fine. I'll try a different one.
They need to invest in a complete ecosystem first. And fair enough, yes. I will say I talk to a lot of people over, and I'm sure you guys do as well, over different video conferencing companies. And I first get, most people come to me with Teams, and when that doesn't work, we go to Google Meet. But I will say I had a call with somebody on Zoom the other day, and it was by far the best one that I've had so far with no problems. Meet, I generally don't have any problems, just nobody knows it exists. That's as far as I can tell on that one. But there's so much competition there. We're using Riverside. Riverside's great, but most things, it can be frustrating sometimes. But I think they all have little problems like that, and Zoom is not out of that either. very interesting one. Kathy Wood. The other thing with the buzzwords, what we're talking about, is one thing I was going to bring up as well, was you might have seen the article that came out in the past 2 days that she's actually had 650 million, I'm going to go with million, but it could really be billion, of inflows in the past week or so.
She's not had 650 billion of inflows. That's the size of...
I'm going to go with million. I think million.
Yeah, but it doesn't matter. The inflows are still there. That's the problem. The inflows are still... Well, according to this article, I couldn't break it down to figure out if it was a placed article or something like that, because you have to watch out for those. Because again, she is not above that sort of level of manipulation. She's not above that level of going out and buying a few spots on CNBC and saying, look, we've had 650 million in inflows. Can you write that up? Because when I saw that article, even I looked at it and went, oh, is ARK coming back again? Should I maybe be spotting in a little bit? And again, just worries me with the fluctuations we've seen in the market. There's loads of dividend and value investors on Twitter right now just saying they're the best thing since sliced bread. Again, I think this market could shift one day, and I'm waiting for it to happen.
So, just to go back to your early defence of the Zoom valuation. When you're talking about flywheels, so these companies normally, when they go out to go and buy other companies or bits of other companies or develop new things, they normally have a flywheel that starts with more than 404 million of unlevered free cash flow. That's not a very big flywheel. You wouldn't buy an awful lot of things with that. So that makes it very difficult to grow the kind of... bear in mind, she's only given you 5 years here for Zoom to hit 52 billion in revenue. And also you will see that when you're only generating 404 million in free cash, add that to net cash if you want, so 5.7 billion, that's still not a lot of money. You're not going to buy $47 billion worth of revenue for $6 billion in cash, essentially. That also doesn't happen. The sort of companies you're buying with this kind of money, yes, they may have revenue, yes, they may grow really fast, yeah, they may add something to the core product, but we're talking here, just looking and working this out in my head, she thinks that people are going to be spending 30 quid a month on Zoom. End users, not companies, per seat.
Yeah, that's it.
£30, and that's just not going to happen.
Yeah. No one is going to accept a Zoom call from somebody, from a business, and have to pay 30 quid a month for it. There's just absolutely no one out there. Your end users need it free, and the businesses pay for it. Maybe you could get a bit of a higher business rate, but I cannot see the conversion there. I cannot see the average revenue per business there at all. I just can't see it.